It's time. What do we have today? We have Enbridge, ENB, Toronto Stock Exchange, 10 years data, monthly candles. I did a static post there, just a JPEG with some lines, posted that on Stock Twitter, and I just thought it'd be interesting to do the show how I came about of that analysis and those implied measure moves by doing a podcast for it. So with no further ado, let's look at this beast. All right, what do I have here? First thing I did, draw my resistance, the picture resistance. Now, I know originally, that's what I always say when people post JPEGs, graphs with lines, they thought about it, there's stuff behind it. It just didn't pop up like that. There's work, and sometimes I draw my lines and I redraw them. See, originally I could have had it like this, and I always erase all of them and redraw them. Makes you practice. Nothing wrong with that, and makes you possibly see a different view, something that you were biased at that moment. You want to be bullish on, or you thought the stock was going up, and you were looking for scenarios like that. Try to look for both scenarios, and there's always two scenarios, right? It's just that sometimes you're closer to one than the other. Like here, right here, I could have made a case before this candle here that broke. I could have made the case that, oh, look, I have a consolidation rectangle, and I don't know, this is my measured move, and I'm just going to look at the upwards breakout up the way to 70. So you could have start looking at stuff like that, and it's okay once you do that scenario. Then look, okay, here's my target. And right now you'd have to run through this resistance right here, so that might slow you down to your target. And then after that you could see, wow, it depends here how many if you have a breakout. See, you're far away. It's very hard to imagine, right? Because let me create some black space. Few candles add, chart morphs, and then if you have another pattern here, well, the whole scenario changes, right? It's not like a double top or a top reversal. Now it's not that anymore, right? Because you have some price action here. It could actually go up, but maybe here you'd have a pattern consolidation rectangle. Remember, these are monthly candles, so this consolidation move here that happened 1, 2, 3, 4, 5, 6, 7, like 6, 7 months, That's a lot of time. And here you could have had this type of pattern. And like I always say, when in doubt, always take the closer, shorter target to the breakout. So this is all nice in theory, maybe. Okay, this should be my target, but you have to consider that you might run to that resistance right here. And you're maybe better off with a closer target right underneath that. So you increase your success ratio. You're going to minimize your reward. So your risk reward is going to be lower. But you're going to increase your success ratio of reaching that target. These are monthly candles. They take time. A lot of emotional, I like to call emotional landmines. The longer you're in a trade, the price starts reverting. Even just one red candle going in the opposite direction, that's 30 days. You had to oh man, is it going to go back up? Is it going to go my target? Then your friends talk to you about that stock. Then you're checking Yahoo Finance. You're on Stock Twits every day for clues. That's crazy stuff, man. Very, very hard to do. So the only way, for me to be a successful position trader is to eliminate every possible or increase every possible chance I have of reaching my possible target. And if that means lower risk to reward, then that's what it is. That's what the price I'm willing to pay to increase my chances and have a healthier emotional life with the family and my sleeping habits. So you see how that's how it draws out the chart, right? But right now, that's not the reality. What happened? Okay, I'll keep these all these little arrows. Okay. But what happened here is, if I add that next month, we actually had a breakdown here. So this is the first target that I've seen before. Charts, monthly candle charts last a long time because it's like one candle, that adds 30 days. So I could have done a chart analysis like even 2-3 months ago. It's only going to be 2-3 candles that are going to be added. Here, in this case, it broke down, but I could have just like played here around the resistance, the support line. And that's why I encourage people to go look at my previous analyses on Badcharts.com or YouTube or StockTwits, and it could still be valid today. All we have to do is relook at them and just refresh them up a little bit, and you're good to go for another 3-4 months. Weeklies, well, don't last that long, and dailies, the best before date is really short. All right, so right now we had this target here. But again, I would have looked. Okay, I have that concept of a previous support turn resistance, turns resistance, and previous resistance turn support, especially on breakouts. Here there was a breakout. So this support, this resistance here now is, let me draw a line, is support. So I have a wall here. Okay, okay, it's a little skewed. Okay, there we go. And you see how even here you see it's tested, right? Right away you see that resistance now support. So right now that could slow that move down, that candle down. You could take this target. I would have liked maybe having more candles here on the breakout area than just one and break it down. If you would have entered on this candle back in those days, you could have said okay, but yeah, would have had to accept that you could have had some turbulence here and it could have slowed down. And you could have easily said, okay, I'm just gonna wait a month or two, see if it actually breaks down here, and then I'm gonna play it, or I'm gonna wait, maybe it's gonna stay here. That's when the emotional gets in there. Don't get greedy. Be patient. There's no rush. There's always going to be other setups. If you're not sure about it, move on. Put alerts. Come back to it later. Nothing wrong with that. What would I check also? So that's some target considerations, like right before clicking sell stop and putting your buy stop here and your profit limit. Always consider walls on your way to targets. And right here, do we have some bearish divergence? Here. No. Lower lows, no bearish divergence. Look, it looks good. It looks really bearish or downward trend. I'm trying not to use those emotional words anymore. Correction, crash, bear, bull. People get into camps. When you see people starting to sit in camps, like I'm a bear and I'm a bull, and that's like they're half wrong. Like they're already down to good mindset, because you're biased when you're going to chart analysis or whatever fundamentals. You're going to skew your views to see what you want to see, and your brain is going to want to reinforce what you want to think to recomfort you, and you're just going to be totally blindsided by the opposite move if it happens. If you're honest with yourself, you see both scenarios, and then at least you let your brain process that information honestly and evaluate which scenario is better, more probable of reaching a possible target. And all right, so what happened here? Okay, this is the last candle actually. So that's why I decided to put the breakdown line at the right here at the 42.50, because I didn't want. I want to increase my chances of reaching that further away target. And right now, after that, we're good to go. Target's going to be a little further. So many arrows. Let me clear that up. Just about here. So that's the candle that I want to close below 42.50 to have that measured move. And you see, the more I look at it, the real target, which is even further down, you can make a case that this is a descending triangle. And you could even have a case that this is the target. Bam. See, and that brings you down all the way to 22. And 22 coincides with right here, previous. Look at that nice bottom formation back then. So there was a 1, 2, 3, 4, 5, 6. 1 year pattern, console bottom here back in 2009-10. Breakout, nice breakout candle above. It reaches target really fast and then trended upwards. So this, I could even put this target actually on the on StockTwits or Twitter. This crazy target here, 22.50. And I say crazy, I shouldn't. I should just say it's a less probable target because it's further away, but it's the implied measured move from that top pattern that I could have used. So that's, I wouldn't go there yet. I'd probably take the closer, shorter pattern. And if ever it consolidates here and there's another pattern I could play to reach that further away target, go for it. But these definitely, there might be whipsaws here and pullbacks and go downs before it reaches that further target. I want to stay in the trade as long as the least long as possible. That's why I go on breakouts. Breakouts have momentum. They push me towards that target. I want to make sure I have no walls or congestion areas on the way. And pretty much here, if we pass this one, there might be one here at the 40 level. See, the more I look, yeah, there might be another one here. So this monthly candle, if it could even close just a little lower, it'd be awesome. And for targets, another consideration is these big round numbers. February, like the end of the target, like let's say it's 22.50, then you want to put maybe your target at cheat for you, reduce your reward, but put the target at let's say 22.15 or even 23.05, just to make sure you don't hit that potential support at that round numbers. And that's how I do it for ENB. It looks messy, right? So, but when I post, I clean everything up and I just show you what the message I want to pass. But all this stuff is the thought process that goes behind it. I hope that was useful for you guys, and see you next time. Ciao.